The newly imposed tariffs by President Donald Trump are already having a significant impact on the U.S. economy. While these measures were introduced with the goal of strengthening America's economic position, they have instead provoked retaliation from key trade partners such as Canada, Mexico, and China. This international pushback has led to dramatic consequences, with the stock market experiencing a staggering $1.7 trillion loss, one of the most substantial in recent years. One of the most immediate and visible effects of these economic policies has been the sharp decline in the stock market. The Nasdaq suffered its worst trading day since 2022, experiencing a brief and insufficient recovery of just 0.5%. This minor rebound did little to reassure investors, who remained wary of the ongoing market instability. The S&P 500 also took a significant hit, dropping by 2.7%, while the Dow Jones Industrial Average fell by nearly 900 points. The technology sector was hit particularly hard, with Tesla's stock value plummeting by 15% in a single day. Other major tech companies such as Apple, Microsoft, Alphabet, Google's parent company, Amazon, Nvidia, and Meta, formerly Facebook, also suffered losses, ranging between 2% and 5%. The collapse in Tesla's stock price alone wiped out approximately $125 billion in market capitalization, reflecting the severity of investor concerns. Meanwhile, Delta Airlines issued a downward revision of its profit forecasts, attributing its lowered expectations to the current economic uncertainty. These developments have contributed to a growing sense of unease among investors, many of whom are now increasingly worried that the U.S. may be heading toward a recession. Trump himself has made comments about an ongoing economic transition period, which has only fueled speculation about a potential downturn. During a public address over the weekend, Trump did not dismiss the possibility of a recession outright. Instead, he insisted that his economic policies were designed to bring wealth back to the United States. However, his assurances did little to quell fears on Wall Street. In contrast, Commerce Secretary Howard Lutnick attempted to counteract recession fears by arguing that the economy remains strong and resilient despite recent market fluctuations. Nevertheless, these reassurances have not been enough to prevent anxiety from spreading among investors. Many financial analysts are now warning that Trump's unpredictable approach to tariffs could create long-term economic instability, potentially slowing overall growth. The broader financial markets have also responded negatively to these developments. Over the past week, the S&P 500 dropped by 3.1%, marking its worst performance in 6 months. At the same time, U.S. Treasury yields fell to 4.21%, indicating that investors are seeking safer, lower-risk assets amid market turmoil. The Wall Street Dollar Index also recorded its lowest level since November, reflecting broader concerns about financial volatility. The economic fallout from Trump's tariff policies is not confined to the United States. Other global economies have begun to feel the effects as well. In China, recent economic reports have revealed a more significant than expected decline in consumer prices, suggesting that Chinese demand is weakening. In Europe, financial markets have also taken a hit, with the Stoxx Europe 600 index falling by 1.3%. However, some European defense stocks have experienced gains, as investors look for safe haven sectors during times of economic uncertainty. Canada has also responded aggressively to Trump's tariffs by imposing $21 billion worth of retaliatory duties on American goods. These countermeasures specifically target U.S. agricultural products and manufactured goods, raising concerns among American businesses that rely on exports. Several key factors have contributed to the current market instability. One major issue is the uncertainty surrounding Trump's trade policies. Many investors remain skeptical of his aggressive approach, particularly as tariff wars with Canada, Mexico, and Europe continue to escalate. The lack of clarity regarding future trade agreements has made businesses hesitant to invest or expand, further dampening economic activity. Another significant factor is the downturn in the technology sector. Over the past several years, tech companies have been among the strongest drivers of market growth, but the recent collapse in their stock values has raised concerns about the sector's stability. Additionally, fears of an impending recession are growing, with some economists warning that Trump's policies could push the U.S. economy into a full-scale downturn. If a recession were to materialize, it could lead to widespread job losses and a decline in consumer spending. Meanwhile, major corporations such as Delta Airlines and Tesla have begun issuing profit warnings, citing economic uncertainty and decreasing consumer demand as primary concerns. As investors attempt to navigate this turbulent landscape, they are closely monitoring several key indicators. One of the most anticipated upcoming data releases is the next inflation report, which could provide insight into whether consumer prices are stabilizing or continuing to rise. The Federal Reserve's decisions on interest rates will also be critical, as changes in monetary policy could either help stabilize or further destabilize financial markets. Additionally, some analysts are speculating about the possibility of government intervention to prevent a full-scale economic crisis. However, whether such measures will be taken remains unclear. Trump's hardline stance on trade policy has further heightened uncertainty. His administration has threatened to impose new tariffs on imports from Europe and China, aiming to pressure foreign governments into renegotiating trade deals that he claims are unfavorable to the U.S. The White House continues to argue that these aggressive measures will ultimately benefit American workers and industries. However, critics caution that these tactics could have the opposite effect, triggering prolonged economic slowdowns and further market instability. As Trump's re-election campaign gains momentum, his economic policies are expected to be a central issue in the upcoming election. The key question remains: will his trade strategy ultimately prove to be a winning formula, or will it backfire, plunging the U.S. economy into deeper turmoil? At the moment, financial markets remain volatile, and investors are bracing for further disruptions. As Trump doubles down on his use of tariffs and trade restrictions, the economic landscape is evolving rapidly. The coming months will be crucial in determining whether the U.S. economy can recover from these setbacks or if this marks the beginning of a more severe financial crisis. Regardless of the outcome, the economic and political implications of these policies will continue to shape the global financial system in the foreseeable future.